Wait. Hold on a second. You're buying outside of title.
Yeah.
Why would you ever buy anything outside of title? That's like, sounds crazy. This case, essentially, all in, 13 grand for a what?
For a $225,000 property.
That's
crazy, right? When you want to buy a red car, you're like, oh, I want to buy this red Corvette car. And then you drive on the road, you start seeing those red Corvette cars, right?
For sure.
Same thing with Curative. Like once you know what you're looking for, you start seeing those things.
You think it's gonna be saturated like wholesaling is?
Dude, so the answer is no. And the reason why is because the reading level of the United States is like 7th grade. Like every, I'm just saying it's gonna be like not a saturated market because the amount of time, patience, and diligence that you need to be able to like just research one lead is actually like a high barrier of entry.
Yo, Phil.
What's up?
How many rentals you got?
Now I've got probably maybe 45 left, 40.
Nice.
Including Troy and all that stuff. Yeah. I'm counting those too as well.
Yeah.
It's probably like 45, 46. Right now.
So have you ever thought about how curative investing could actually get you more rentals?
Yes and no. I've thought about it after hearing from like other people, right? But then like, do I want the headache?
The headache of what?
Of managing tenants, managing the property.
Oh, okay, got it. So you're like actually selling some stuff right now?
Yeah. We're selling stuff too as well, you know, it's not just me too as well.
Okay, but like let's say, maybe that wasn't the best example. But let's say you wanted to increase your portfolio from 40 to 50 to 60 right now, right? Have you thought about how you could use curative investing to acquire more doors?
Of course, yeah.
Yeah?
Yeah.
All right, go do it, dude.
I will.
Go do it. Try it right now.
I'll try it one, right now.
So the one in Austin.
Which one?
The one that we can't talk about yet.
Yeah.
We can't talk about yet, but the one in Austin.
Well, why can't you not talk about it? Just for context.
Well, it may or may not be steeped in litigation right now, so we want to just chill on those for right now.
Yep.
However, if you were to start adding to your portfolio of rentals with curative investing, what's the first way? Like, let's say you were working on a deal right now. You've closed some deals on your own, bro. I mean, you say you're not a good you say you're not a good salesperson.
Yeah.
And I mean,
I'm not that great.
You got some room to improve. But
of course,
but the thing is, everyone does. But the thing is, you got some deals under your belt, right?
Yeah.
So how would you take what you've learned right now, and if you wanted to get more doors, what would you do right now?
Right now, I would look at the tax delinquency list of whatever county that I'm looking to buy in, and then conduct a whole bunch of research. Research meaning look into the land records, finding the vesting deed, seeing if there's any break in title, finding deceased date, anybody the deceased in the property.
Yeah.
Going through probate records, the central appraisal district records, which is called CAD, and just try to find any distress in the tax delinquency roll. And then from there,
like, wait, hold on. I'm gonna break it down.
Yeah, write that shit down.
Like, cause when you say any distress in the tax delinquency roll, aren't all of them in some kind of distress because they're tax delinquent?
Yeah. It can be, right? So for example, what I consider not that distress would be there's no death. And then the taxes are maybe 1 year behind.
Okay, got it. All right. So then how would you filter that more to have higher distress?
Higher tax balance.
Okay.
Death is involved. Probate's not done, or there's a break in the title.
And then when you say death involved, like, what are you talking about?
The owners of record, people that are owning the homeowner or the seller is deceased.
Okay, why?
Because that might trigger a break or not a good transfer into their heirs. Like daughters, sons, they may not have the right ownership, but maybe it's not recorded on the land records.
But like, what do you mean not a good transfer? Like
it's like in the state of, right? But like, let's just say
like no probate was done or something?
Probate, no probate was done.
Got it. What's probate? I don't know how many people here know, but what's probate?
Probate's a legal process to transfer a deceased person belongings, personal property, and then real property into the heirs or whoever is designated to accept or receive.
And like that's where you have a will.
Yeah, and go through the whole court process too as well.
Okay, so you look for ones that have death and
have
tax balance, and then have some kind of probate or no probate. Does that matter?
No probate's best, but maybe a probate that's also open but not complete. But also it can be complete too as well. So it really depends. You have to read through the probate and see what's happening in my opinion, right? You can also correct me if I'm wrong here, but look at the probate, see what's done. There's many missing major milestones that could be a sign of distress. It could be fighting between family members of who gets what, also a sign of distress.
Gotcha.
Maybe they completed the probate and nothing has been done. Like there's still taxes accruing. Right? That could be another sign of distress. So, you know, like you just gotta really read through it. I don't know, just read. Like I'm horrible at reading, but I just kind of read through it.
Got it, so read through it. And then after that, so death is confirmed, there's a high tax delinquency balance.
Yeah.
And then
what?
And then you just read through it. Got it. Thanks, dude.
I just read through it.
You told me nothing.
Yeah.
Just read, bro.
And then you just kind of build a story.
Okay.
You build the story of like, what's actually happened? What's happening with this particular property? And then you just, based on your words, right? Our training, right? You just call to see if there is any distress, see if what's happening, why things have stalled, what's happening with the property, why is it going so high in taxes, and then just see if you can solve a problem for the property, maybe monetize on it, buy it out for pennies on the dollars.
How does that become a rental? Like, okay, so you call the heirs. Okay, so tax, delinquency, death, call the heirs, figure out what's going on. We call it the fact pattern.
Yep.
And then once you see the fact pattern, you try to solve what problems are going on. And then like, okay, from there to a rental, like how does that?
Yeah, how does that work, right? So when there's a sign of stress and I'm able to get a heir or a seller on the line, kind of this one and the same.
Yeah.
We have a conversation. If there's distress of like, hey, they want to sell it, maybe it's a pain in their ass, maybe there's squatters in the property, maybe it's, you know, whatever the case may be, code violations, etc.
Yeah.
Maybe we can strike a deal of buying the property or their particular interest for pennies on the dollar because they're
like,
so much
why
pain.
would they sell? Yeah.
Yeah, because maybe they're getting sued by the county for taxes that are sued from the county.
Okay.
Yeah. Because they're in a lawsuit, because eventually...
because like some counties in Texas sue the estate and things like that.
Because they're not paying the taxes, and eventually a tax suit becomes a tax sale. So it's basically a tax foreclosure.
Yeah.
And then they're going to be getting nothing. So if I know that, then I'm like, hey man, I would rather see you or her get money versus going to the tax sale and potentially not getting anything at all. So then we can come up with an offer that makes sense. Obviously, I'm trying to buy it for low, depending on the condition of the property, based on me asking questions and probing and seeing what's happening with the property. From there, if it's in a distressed condition, even more distressed than what they want to actually fix up, then I can strike a deal, and then I can then do my BRRRR method, if you wanted to say, right? You can buy it for super low.
Right.
Let's say it's worth $100,000. I offer them $1,000 for their deed. Let's say this person is 50% owner, and
you offer them what?
$1,000.
Wait. I was like, how is that possible? Why would they take $1,000?
They would take $1,000 for, they may not take $1,000 actually. So, but what I can do is provide all the facts and evidence that I've researched. They got to go through the probate process. That costs $10,000 to $20,000 for an attorney. Like it may take X amount of, maybe 6 to 1 year to do. And then on top of that, they have back taxes that they got to pay for. And on top of that, they might be in a tax suit or tax sale. So they're limited in time. So their options become less and less as this tax suit or tax sale is happening.
Well, then another thing, which is like,
well,
what about their dynamic with
their sister or brother, right? Or the other family member, right? If they're in, I would say not seeing eye to eye, that's even better for me because maybe they don't like each other. Maybe they have differences of taking care of the property. Maybe they feel like they're entitled.
Well, so like, let's ground this real quick.
Yeah.
So you, like on the deals that you've gotten, let's just pick one in Austin, let's say. I think there's 4 or 5 heirs. And you bought out, let's just say, just pick one. One of the heirs, how much did you offer them?
One of the
and by the way, this property is worth like 200, 250.
Yeah, somewhere in there. Yeah,
right?
Okay. Yeah. So I offered them, I believe it was like $1,200.
Okay, so this is an example.
This is an example, yeah.
Oh.
Yeah, it's one of the examples.
Hold on a second. So you're saying 20% owner.
Yeah,
there's 4 or 5 heirs,
roughly,
right? 25% owner.
Well, it depends on the family tree, but yeah, let's just go.
No. In this case.
In this case, yeah.
The one in Austin.
This case, this person was about 12.5% owner.
Okay.
Yeah.
And then 12%.
Yeah.
That means there was 10 of them.
No, because the family tree was like this.
Oh. Yeah, go ahead, explain it to them.
All right, so there was like, mom and dad, this is kind of easy example. They had children's, right? They become the next to inherit the property. And then let's say one person, their sibling or their son passed away and then they had children. They had multiple children.
Got it. So one of those, the grandchildren had like 12%. You offered them $1,200.
Yeah, exactly.
Did they accept it?
They did accept it.
Okay, and they had 12% of a 250. Right. Okay. So like, let's say roughly if it was 10% of the value of the property, let's cut it, slice it in the middle, 225. That's a $22,000 piece of equity that you got for $1,200.
Yeah.
That's a
pretty good deal.
Solid deal.
Solid deal, right?
Okay, and then some of the other heirs.
Yeah, generally they were kind of the same. One was actually less. The other grandchildren was about $1,000.
Okay.
Right, and then the other one was about $2,000.
Well, what about like the 20 to 25% owners?
They're $5,000 each.
Okay, got it. Yeah. Okay, cool.
So all in all, like all in $13,700.
Got it.
Yeah.
All right. So this case essentially all in 13 grand for a what?
For a $225,000 property.
That's
crazy, right?
That sounds like a scam.
Scam, yeah, which it's not. I know.
Okay.
So
you sure?
I don't know. Am I? I don't know.
Pretty shady, bro. You're sitting in a dark room wearing black.
Yeah.
Wait. So that's a pretty sick spread.
Yeah, that's a lot.
So then,
but also, okay, to kind of caveat to that, taxes are about 70, 80 grand.
Okay.
So like that eats.
Okay. So that eats some of the margin.
Yeah.
Okay. So help me.
And a looming tax sale. It's in tax suit now.
Got it.
So that's another fact pattern. So it's like boom, tax delinquency, tax suit.
And so, okay, so let's I just wanted to zoom out.
Yeah.
Because you were like, I'll offer them $1,000 for 50%. And
why would they do
it's $100,000 property. It's like, why would they do that, right?
Right.
Ultimately, it's in these situations where there's property distress, financial distress, family distress.
Yep.
Where the heirs don't see eye to eye, they don't go, okay, gotcha. So that's how you're able to get their partial interest for such a low amount. Okay, cool. So then after, let's just, in this example, you're trying to buy a new rental in your portfolio, property's worth 100-ish K.
Yep, equity-wise,
Yeah, and then you're going to, whatever, 20 or 30 or 50% of the owner, right? A partial owner, and you're offering them a few $1,000.
Yep.
Okay, got it. So once you do that and they're like, I don't want to deal with my brothers or sisters, you contract with them.
Yep.
Are you going through a title company to do this?
No, I'm actually buying outside of.
Wait. Hold on a second. You're buying outside of title.
Yeah.
Why would you ever buy anything outside of title? That's like, sounds crazy.
It is crazy when I first heard it too as well, bro. But you're buying the deed and you already know, since you've done so much research of what is actually going on. So I have a general idea of how to fix it. So I'm actually trading cash of ownership, literally, because I don't actually want to go to the title company because they're going to run title. They're going to pull all these, they're going to do what I'm going to do essentially, right? And the only reason I'm going through title is because I essentially want title insurance.
Okay.
And I don't want to buy title insurance in this particular case because I already know the problem. So I'm trying to solve the problem to be able to give the end buyer title insurance.
Got it.
Yeah.
Wait, that's still kind of confusing to me.
Is it? Yeah.
So, okay, so hold on a second. You don't want to go through title because you don't necessarily need, you don't want to or you don't need to?
I don't need to.
Okay, gotcha. There's a difference there.
Yeah.
And so you don't need to go through title because-
I actually don't want to either.
Why?
Because I don't need to. If I don't need to, I don't want to, right? I don't really want to go through title.
Bro, just choose.
If I don't need to.
Okay, and then because you don't need to, you don't maybe necessarily want to. Okay.
Exactly, yeah.
But what, maybe there's added fees and other things.
In time.
Okay.
If I'm trying to get this person like locked in, $1,000,
gotcha,
I don't need to go, I
see. Okay, that was just like a weird little thing that happened there.
Yeah.
But nevertheless,
yeah.
So you go and buy property outside of title because you're the one that's doing the title research beforehand.
Exactly.
And so you're in essence kind of like predicting what the title company
will find.
Yeah. So what their title search is going to find.
Yeah.
So then you're like reverse engineering what the insurers will need in order to issue title insurance.
Yep. Insurers like Fidelity,
Gotcha. Old Republic, Stewart. Got it. So then this is kind of weird, right? Like coming from the traditional lens, because what we're taught is like you never buy a property outside of title.
Yeah.
But like what you're saying is because you've already done the research and you've actually read.
I read sometimes, yeah.
You read sometimes.
I read sometimes.
That's surprising.
Yeah.
Because
I know. I hardly read.
You're not a strong reader.
No,
Bro.
no, I'm not.
So if Phil can do it, you can do it. Guys.
Definitely do it, guys.
Yeah. So because you've done your due diligence and you've done your underwriting correctly, you know that these people are the heirs.
Yeah.
And then you'll go ahead, buy a partial interest for some cash.
Yep.
And then outside of title, and then after that, what do you do?
Outside of that, then in this particular case, let's just say a person was living in the property, a squatter, right? So then we have to now negotiate with the squatter. If they don't
but do you get the rest of the percentage?
Oh, yeah. I thought that we got so I got all the percentage already, so.
And how do you do that? You just go to each heir and you're like, hey,
I just
you don't want to deal with the squatter.
Yeah, I do the same thing as I did with the first
You got
person.
these taxes that you owe.
Yeah, exactly.
Okay.
I explain the situation the same way, but obviously there's a caveat to that, you got to understand who you're talking to.
Okay.
So it's also the dynamics of the person, right?
Got it. So in this instance, there's a squatter.
Right.
The family members don't have the money to pay for the taxes to evict to get along.
Yep.
So you buy the whole
shebang
for, let's say, like, I don't know,
13,000
to 15,000 somewhere.
Yeah,
somewhere in that range. I think our average right now is around 20.
Okay.
So you accumulate, compile, go to each heir individually, buy each of their interests outside of title.
Yep.
Now you're 100% owner.
Yep.
Now you got to deal with the squatter.
Yep.
So then what, you do cash for keys or what do you do?
Well, we'll do the lowest hanging fruit, and that's the eviction. We'll try to evict the person.
Okay, got it.
Yeah.
Wait, like you won't do cash for keys?
We'll do cash for keys.
Okay.
If they say no or go, F off, then let's just step up a notch.
Right.
We'll just do an eviction. If that works, great. If not, then we'll just do the next step and then progressively do the next step. But when I'm talking this out loud, it may not be the best solution based on if you know the personality of the person, right? So like, let's just say if we knew from day one, this person was like, I'm not like leaving, I don't care if you get an eviction on me. Right. Like maybe we just go for like the hammer. We got the hammer.
Go for the hammer.
Go for the full blown
Thor's hammer.
Yeah, right on.
We're just coming in hot.
Yeah.
Can you actually, quick question, can you start an eviction even if you're not 100% owner?
I don't think you can. Okay, I thought you mean like something else. I think like if you're not an owner at all. But yeah, if you're like 1% owner, you can't start an eviction.
Yeah. Okay, cool.
Yeah.
So you can do an eviction if you're a partial owner.
If you're a 1% owner.
So you could drop Thor's hammer before you even get 100%.
You could, yeah.
Okay.
Yeah.
Got it. So then you can see how this is not scripted. We're just off the cuff, like rolling with it. Wait. So you file the eviction, you drop Thor's hammer,
right?
You evict them.
Yeah.
And then what?
And then we take control of the property. Now we can do whatever we want with it, right? So if we have 100% ownership, now we can just flip the property back on the MLS.
Or we're talking about rentals right now.
Or we can refinance the property to get our cash back out.
Ah, okay.
So we're 100% owner.
Wait, but would you have to do repairs?
It depends on the condition of the property, right?
Well, yeah, but then you would also have to pay the taxes.
Yeah.
So it's like your basis into the property is what you paid out the heirs for.
Yep.
And like eviction fees and whatever stuff.
Whatever legal fees you have.
And then, all right, then you got a vacant property. It's probably not in the best shape if you've got squatters in it, right?
Potentially, yeah.
Just like,
for sure.
Just being real.
Just being real, yeah.
So no cookie cutter, no fluff. Like we're gonna like real talk this. So you got a property, you probably gonna have to put in like at least 20 to 30.
Like on like a rental grade kind of status.
At least.
Right? Yeah, at least. Right. Yeah, at least.
So once you take possession of once you take control of the property, your basis is what you paid out, legal fees, plus any repairs that you might have to do.
Yep.
So like if you paid out the heirs, let's say, I don't know, 10 to 15K, let's just say 15K.
Yeah, easy numbers.
And you paid another 5K in legal. You're all in 20K.
20K.
And you got to pay another 20K
to fix
repairs.
It up. Let's say 30K. So 50K.
Yeah.
50K.
Okay, so you're 50K all in.
Yeah.
Not everyone might have 50K just chilling in the bank to do this, right?
Yeah.
So is there another way that you could get cash to do the repairs, to get paid back?
You could definitely
what would you,
So, I mean, you could do hard money, like that's a traditional way. Do hard money.
Right.
Borrow the money. Get what you need with what you paid out the heirs, have the hard money lender in first lien position, and then once you do all the repairs, then you can do a cash out refinance with one of the bigger banks or your local community bank.
Gotcha. Right. It's kind of it's not the traditional way because when you typically get a hard money lender, what you're doing is you're either using a wholesaler, you're direct to seller.
Yep.
And then you close on it with a title company. Yep. And then you get title insurance.
Yep.
And then that hard money lender's like, okay, based on how low you got it, I can lend on this.
Yep.
They give you 2 and 10 or 2 whatever it is, 2 and 15, whatever.
Terms and conditions apply differently to people.
But hold on, your basis is typically way higher because
Yeah.
you're offering the seller, if you're direct to seller, you're offering like a, not the market value price, but like a wholesale type price.
Yeah.
So if a property is 100K, which not many properties are these days, but
depending
like
where you live.
depends on the
If
market
you're in
share.
Ohio, I get it.
Okay,
Yeah.
But like, okay, so if the, let's say AIV, as is value.
Yeah.
So if you were to just slap it on the market as is,
Yeah.
it sells for 100K.
Sure.
So you're probably buying it from the seller between 80 to 90.
Yeah, as a traditional method. Yeah.
Like when you work with a wholesaler, you go direct to seller.
Yeah.
You're buying it 80 to 90, maybe even less, 70.
Yeah,
70.
70.
But in this case, your basis is 20.
20, yeah, which is super low. So you could be all in at maybe even at 50%.
Right.
Of AR, yeah.
So but then you can still, if you don't want to have any more money out of pocket, you could get hard money to close on the property. They give you your rehab fees.
Yep.
And then you do the traditional thing that the BRRRR method of you've now bought it, you've now renovated it, you've now refied it.
Oh, you rented it out.
Rented it out and then refied it.
Yeah.
Sorry, first time.
First time burn. Yeah.
And then you can just take your cash out that way and put a renter in. But because your basis is so much lower, your cash flow is so much higher.
And then you also get probably money back from
in your pocket.
Refinance, right? The other way you could do it, now I'm thinking about it, you can also just go in with the traditional bank and then stake your equity and then get a loan for construction. And then once you're done with the construction, have the same bank refinance the whole thing.
Got it.
Right?
Yeah.
Same kind of situation, but maybe better terms.
And so what if you wanted to get money from the very beginning?
Yeah.
Like let's say you didn't have the 20K to do all this. Like what would you do?
Well, let's say I had maybe 50% ownership in the beginning, right?
No, I'm talking about even before it. Like before, I mean, okay, if you're getting 50% for 1G.
Yeah. Yeah, I mean,
I'm sure you got a G.
Yeah.
But
if you don't, you shouldn't be listening to this right now.
So in the case where you can get 50% ownership for like 20,000 right there, but you don't have 20K sitting in the bank. What could you do?
Borrow from friends and family if you have them.
Yeah.
Right? You could take a credit card out. Liquidate that bad boy. You could, what else could you do, dude? I don't know, like
could you find lenders who lend on partial interest?
I'm sure you could, but those are really rare, far between. Like if you're coming from the traditional world, right? Like it's super risky for a lender. Dude, I don't know, man. Liquidating credit cards, borrowing friends and family.
There's actually a buddy we know, Chris Burns.
Chris Burns. Yeah.
Pickle Fund.
Yeah.
Shout out to Chris.
Yeah. For sure, you do that. You could borrow from those folks. Yeah. You also JV with somebody that actually knows how to do this.
Right, but then you could also, can you put a deed of trust for a partial interest?
Yeah.
Okay.
Yeah.
So you could go to a private lender, friends and family, and secure that portion with
the money.
with a deed of trust. So basically, what you're saying is this is a way that you can acquire more doors with a different acquisition strategy.
Exactly.
That helps your basis to be way lower. That helps to ensure that your cash flow
is higher. Yeah.
Right.
Yep.
So you're not getting screwed by interest rates.
Yeah.
I mean, the interest rates, the Fed is the Fed.
Yeah.
Interest rates are going to be what they are.
Yeah.
It's not like historically they're at some crazy rates right now because they're not.
They're not.
But still, because of how competitive the market is, trying to get your cost basis for this purchase to BRRRR it out has never been harder.
True.
Right? Like back in 2020 when rates were like 3.
Everybody's making money hand over
dude,
fist.
The numbers penciled. But now, if you wanted to make sure you had that cash flow or you want to put extra money in your pocket from the refi, tax-free.
Because it's a loan.
Right.
It's a loan. You can definitely do that. And also you can borrow less to increase cash flow. Instead of going the full 75% loan to value, you can maybe borrow 60 and then that way you're not squeezing yourself with the back end of like payments and all that stuff. So depending on what you're looking for, you can get either a higher return through the loan, refinance loan, or you get the higher cash flow, depending on how much you borrow.
Gotcha. I just had a thought, going back to our original acquisition strategy of like tax delinquency and like looking at those lists. Do you think there's other ways or does it have to be tax delinquency of acquiring a lead? Are there other ways?
Oh, like HOA liens and like liens of like other federal, like IRS liens, right?
IRS liens, HOA liens, what else?
Like code violations too as well, potentially.
Oh, like demolition liens?
Demolition, yeah. Shoot, I'm sure I might be missing one or two things.
No, but okay, so there's other, so you could like go to your local courts, look through their
county records,
right?
Yeah.
And like land records, court dockets, and then reverse engineer the kind of property that might lend to this fact pattern based on the indication of a lien. Like this, right? It just takes some reading and getting used to poking around. Because tax delinquency is just one source of how these leads are just readily available out there. I mean, like you can drive for dollars.
Yeah, you
I mean, well, why are you laughing, bro?
No, it's just like it's a great strategy, guys.
Why you
recommend driving for dollars?
Have you ever gotten a driving for dollars lead?
I have gotten. Yeah. But,
okay. Well,
yeah,
then, why are you laughing, bro?
I don't know. Yeah, just, you can look through more leads if you just do this method.
Oh, to scale.
Yeah, to scale. Yeah.
Okay.
Yeah. I don't know if you have time to drive around for a dollar or drive around to find properties.
Why are you talking like country bumpkin saying driving for dollars?
Driving for dollars now. Well, I mean, I'm just trying to put myself in the shoes of like a W-2 employee, right?
Okay.
Yeah.
Sure.
Yeah.
Sure. Yeah. I mean, yeah. If you're a professional making six figures,
because this is like kind of the target audience if you think about it, right?
Yeah.
People buying rentals are like usually have a job or like
for sure
they have like a lot of cash and they don't want to.
Right.
They have more value. They have more money than they do have time.
Gotcha. Yeah, makes sense. Well, then, like, how do you compress the time that they would have to do in the research?
That's a hard one. So we paid Logan Fulmer for that, right? So we wanted to compress time.
Right.
We paid a mentor, basically, right?
Yeah.
And so how I look at it is like, if I ever want to compress time, I just pay somebody to teach me what I don't know. And that's what I did in the beginning of my real estate investing journey. I paid $8,000 to compress time.
Is that like Fortune Builders?
Fortune Builders, yeah. I compress time,
Yeah.
I didn't know what I didn't know,
True.
so I'm like, okay, I don't want to go buy this 200 grand property and just lose 200 grand. That wouldn't be very smart. So if you go through the research process like blindly, you're not gonna know what to look for because you just don't know what you don't know. And so it's better to know how to find good deals and how to present your findings to an heir or a seller, and then kind of spin it to where it makes sense for them. And then you have a hand holding to like, hey, is this good? What am I missing here? That will save you so much money. Like honestly, so much time, headaches, and just brain damage in general. That's what I would do.
Random question. Why do you think there's not a lot of Asians in real estate? I don't know why.
You're going to that?
Yeah. Just like, I don't know why. I like thought of that right now.
I think
why do you think that is?
I think there's a lot of people, a lot of Asians that are in real estate, but since our culture is very like heads down, work, don't be loud. Don't be loud. Yeah. Don't be a superstar.
Right.
Like just
we're trying to be a superstar. Yeah.
Just collect money secretly and like pretend that you're like humble and poor. Yeah, that's all about the Asian culture, dude. Straight up, that's my mom. Yeah.
Unless you're a crazy rich Asian.
Yeah.
Got it.
Then you're not listening to our stuff anyway, so it doesn't matter.
Yeah. It's the total rabbit trail.
Yeah, total rabbit.
But yeah, okay. I think that's...
What I will say, not only will this work for a single family house, but this will also work for commercial, multifamily, and like all types of properties.
Right.
Not just single family homes.
Right. Long story long. Long story long. Yeah, curative investing to get rental doors for your rental portfolio. I guess in another way, if you don't do the acquisition strategy, there's no way you can really buy it that cheap.
Not that I could
How else would you buy it that cheap?
I mean, foreclosure, like regular foreclosure is obviously not that cheap either.
What, you're gonna go to auction?
Yeah, exactly. Like you can sub to a freaking thing. Like
but then
you have multiple heirs. It's not gonna make sense. Yeah.
But if you sub to, your equity's gone because you have a mortgage.
Exactly. Yeah. Exactly. So like you're saying buying that cheap, but no, the equity depends on like
buying cheap based on the equity that's actually in the property.
Yeah. So there's really no other way than just being a nerd. Simply put, like.
Are you saying we're nerds?
Yeah. Hell yeah, we're Asians.
Is it because we're Asian?
Yeah, we have slanted eyes
and
all that stuff.
That's the reason why I brought the Asian thing up. Because I knew somehow that would come back full circle. Okay.
Yeah, I mean, like, you just gotta be not book smart, but like, it's kind of hard to describe like the skills that you pick up when you're. Yeah. It's like a good example of this. Like when you want to buy like a car, a red car, you like, it says earlier, right? You're like, oh, I want to buy this red Corvette car.
Okay.
And then you drive on the road, you start seeing those red Corvette cars, right?
For sure.
Same thing with Curative. Like once you know what you're looking for, you start seeing those things in the land records, the probate records, etc. Right? It's called the fact pattern, right? So I mean, I say all that to say is it just takes time to become to have a well-trained eye, to be able to find good deals. Good deals lead to better like cash flow, wealth building, etc. Right?
How do you think the industry will grow and evolve with this? Like, do you think it's gonna be saturated like wholesaling is, where you have all these people and their mom watching TikTok, skip tracing leads and calling them?
Dude, so the answer is no, and the reason why is because the reading level of the United States is like 7th grade. Like every.
Okay, got it.
I'm also speaking from experience.
What's your reading level, bro?
Like 6th grade. 6th grade.
Oh,
actually.
Okay. Wait, so okay,
I'm below.
good. Yeah, what's
But I'm not
what you
thinking
saying?
myself.
Yeah.
Yeah. So like, I'm just saying it's gonna be like a not a saturated market because the amount of time, patience, and diligence that you need to be able to like just research one lead is actually like a high barrier of entry. And like I've only been doing this for a short period of time and not very often at all either. The amount of strategy that is required in this particular sector, because you have so much legal jargon, legal regulation, law, and like what to use in specific situation. And like you have to also have like a lawyer to actually contact to like bounce off ideas, can get very expensive fast. And people that are wholesaling are not used to that. And the approach of it is completely different as far as talking to the sellers, right? Because it actually takes you to have a research background to be able to present the facts and be able to do problem solving at a higher level.
Yeah, so basically because the operator's ability of competency, critical thinking, problem solving skills and all this like compounded creates a natural barrier to entry in the industry as well. So that's why we think Asian people will be good at this.
Yeah, that's right. So all you Asians out there.
All you Asians.
You know who to find.
Let's go. Cool, man. What else, man? Anything else regarding rentals, Curative? How do you use Curative for rentals?
I mean, there's one thing that I will say, like I have a buddy of mine that actually had people that were living, not like total opposite of this case right now. They were living in the property. They had low tax delinquency, but there was a looming tax sale. And he actually went to the people that lived there and offered them the deal of their life, right? He offered them to buy out their interest, pay off the taxes that were owed to stop the tax sale and still live in the property until they passed away. Now, they're a little bit old, they're an elderly couple, so like it's you know, it's great for him, great deal for everybody around. So not only did he get the property at 100%, but he also was able to take his ownership of the property and go to the bank and do a refinance and then have the original owners live in there for the rest of their lives until they, you know, pass away versus moving out and paying a higher rent rate somewhere else where they couldn't afford. And what he did was he did a refinance. He didn't have to fix anything up. And then he also gave the option for the owners to buy it back. They choose to, but they're like, nope, I don't want to buy it back. I'm just going to pass away. This is the best deal I could ever get.
Kind of like a life estate.
Yeah, life estate situation, right? And so how much money did he make on that deal? He actually made $68,000, but it was a loan, right? So he didn't really make money. He took the equity out of the house through a loan and then was able to use that money to scale its operation. And he cash flows like $400 or $500 a month without actually having to do any renovations, right? So that's another way. There's not going to be always a cease death involved in the case, but like you really got to understand like what's happening.
Got it. So 60 something grand in your pocket and cash flowing $500 a month. That's
pretty solid, right?
Pretty it just dawned on me the example that we talked about earlier. We didn't include a tax figure. So just for like the sake of being impeccable, you just have to add that tax figure in, and then your cost basis goes up a little bit or whatever. But that's it. That's your all-in cost.
Yeah, just do the math, guys.
Come on, just math.
Just math. Be Asian, do math.
We're going hard on this Asian thing.
Yeah, we're hard.
Episode 2.
Episode 2.
Right,
you know?
Here we go.
So that's another way you can make money through curative investing as a rental kind of exit strategy, and also will just reduce your cost basis way lower, you know, as a landlord. That's it, guys. So if you guys found this really helpful, make sure you guys share this with other investors. We really appreciate that. We do have a free school community where you guys can learn more about curative investing. The link is in the description, so make sure you guys check that out below. And we'll see you guys next week here on the Curative Investor Podcast, or whatever it is.
Whatever this is.
Whatever this is. Peace.
Curative Investor Asian Podcast.